What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. Now, we are back today with a very important market update as the Ethereum staking yield has been boosted from about 5% to 8.5%. We do also have a full legal document of how FTX went bankrupt, and these financials are shocking. And last but not least, we have Binance actually being investigated for their involvement in the FTX collapse, as well as Crypto.com making some record-breaking CRO burns in the dead wallet address. So without further ado, it is time to sit back, relax, grab that Friday cup of joe, and enjoy the show. First of all, happy Friday, everyone. I hope you all had an amazing week out there. I am wishing you all an amazing weekend ahead. And if you've not yet hit that sub, like, and notification bell, please consider doing so and joining the Everything Crypto Squad. And I love and appreciate you all. And with that, we're going to hop right in here with the question of the day. And today's question is, if you could only pick one squad for your portfolio, even weighting of 33.3% each, which would it be? And squad A is Bitcoin, BNB, and Matic, and squad B is ETH, Quant, and CRO. Let me know in the YouTube comments down below. Now, hopping into the Bitcoin and Ethereum charts, as they do dictate where a majority of the crypto market moves. And for starters, we got Bitcoin currently trading at about 16.6K. Ever since we did capitulate, given the fallout of FTX, we have not even made our way back up to the June low at 17.5K, and we're pretty much trading in a wide range of about 2.5K between 15 and 17.5 grand. Now, personally, you guys know if you've been with the channel for a while that I am suspecting we make our way down to 15K and even lower based on the very likely chance that miners do capitulate in the near future. We actually spoke about that in detail in yesterday's video, so feel free to check that out. But given that the macro is still not looking too hot in terms of the overall economy, and then the micro in terms of the cryptoverse with the collapse of FTX, the collapse of Genesis, I mean, it really does look like we do have a lot more downside here before we truly enter an accumulation phase. And that is why I do think that we are going to make our way down to 15K. And if we break below 15K, I am looking for $12,000 on Bitcoin. That is where I would be looking to buy a more substantial amount personally. Now, also do keep in mind that 17.5K, which did act as the local bottom, I mean, it pretty much acted as support for June, July, August, September, October, and that does indicate to me that it's going to be a very difficult level to break back above, as it was once a strong level of support and now flipped to resistance. So that is what I'm looking for on Bitcoin. If we actually remove the lines here for a second, you're going to notice that we are effectively in uncharted territory here. We are well below that 2018 all-time high, which Bitcoin has never done in a previous bear market, go below the previous bull run's all-time high. We are also below the 200-week moving average here, which pretty much any time in the past 5 or 6 years would have acted as a great buying opportunity. If you bought at the 200-week this time around, you would have been wrecked. And that is why I say, even if Bitcoin does start to make a move to the upside, keep in mind that we're not even going to look somewhat bullish on Bitcoin until we can get back above that 200-week, and currently that's about 45% away. So I definitely think that given what is happening right now within the economy and the crypto space, the downside move is much more likely than the upside move, and that is what I am waiting for to pack my bags leading into that accumulation phase. Now, looking at Ethereum here, we're actually trading at 1204 at the moment, and the only thing I can say about Ethereum that does make it look a little bit better than Bitcoin is it is not below its June low. In fact, strangely enough, it's actually well off of its June low still by about, let's see here, by about 40%. So the June low came in at about 880, and we are currently at 1200. However, we are still below the 200 week as well as Ethereum's 2018 all-time high of 1400. This does lead me to believe that if Bitcoin is going to break below 15K, that Ethereum is more than likely to at least revisit the low $1,000 range. But as we have discussed on the channel, ETH actually does tend to capitulate more than Bitcoin near the end of bear markets, and that is why I do still think we actually could see a mid $600 Ethereum, and that personally is where I would be looking to buy a more substantial bag of ETH. Obviously, this is excluded from my regular dollar cost averaging, just trying to put cash aside for those juicier dip buying opportunities. Now we're going to hop into the Bitcoin and Ethereum news, and starting off with the fact that the El Salvador president has announced they are buying one Bitcoin every single day starting tomorrow. And honestly, the media does kind of twist the narrative when it does come to El Salvador and their purchase of Bitcoin, people saying that they're losing money. However, if you actually look at the stats, which the president here does address himself, you can see that ever since they adopted Bitcoin, they are one of the only countries that actually did have a positive GDP growth. Their tourism has been through the roof. And again, it makes up a very small percentage of their total capital as a country. And he's doing this for the future. So people are very quick to judge right now, saying that they've lost money. I think people are going to have a very different opinion on this strategy in 5 to 10 years when Bitcoin inevitably does break back above those previous all-time highs, in my opinion. So once again, you just see the continued institutional adoption of Bitcoin, and I think more and more people are beginning to realize, as all of these other cryptos who are really just trying to build off the Bitcoin hype begin to crumble, that there really is no replacement for the OG, and that is in fact Big Daddy Bitcoin. So we also do have Grayscale here. For those of you that don't know, Grayscale does have their very own ETF in the form of GBTC. This is the Grayscale Bitcoin Trust, and I'm actually going to go to all here and actually get it up here for you guys. So you're going to actually notice that this thing is supposed to move in line with Bitcoin, but if we actually take a look at what's happening here, you're going to notice that Bitcoin, words tough sometimes. Bitcoin has actually vastly outperformed GBTC, and this is obviously not a good look as it was intended to mimic Bitcoin's movements. In fact, it is now trading at about a 42.69% discount to Bitcoin itself. So Bitcoin is currently trading at about 16.6K. If you're buying GBTC ETF, you are effectively buying Bitcoin for about $9,000, the mid $9,000 range, give or take. So this discount is happening for a very specific reason, and it does have to do with the SEC. And it is explained here by the chief operating officer at blockchain security firm Halborn. He says that if you want to liquidate your position in the Grayscale Bitcoin Trust, you have to sell shares on the open market, and currently there isn't the demand there once was for GBTC, which has resulted in the 40% discount. And this is why Grayscale has been fighting to actually convert GBTC from a trust ETF into an actual spot ETF, in which case they would be backing what is in this trust with actual Bitcoin instead. As it is no longer a trust, it would be an actual ETF. The SEC did refuse their proposal to make it an ETF, although they've been allowing futures ETFs, which are inherently more risky right off the bat. So the fact that they are denying a spot ETF is ridiculous, in my opinion. Grayscale has in fact sued the SEC in June of 2022 for denying their request, and since then the SEC has done nothing but stall. And ironically, the SEC says that they are here to protect investors. That is clearly not the case, because if they did allow this GBTC trust to become an ETF, this would effectively widen the gap here and remove this discount, which would actually help investors who are down 40% on this discount when compared to if they had just bought Bitcoin themselves straight up. Now, there is a very interesting theory here that the SEC is in fact going to use what happened at FTX to basically deny the request to make it into an ETF. And they say here the delay in pushing regulation forward on Capitol Hill could in turn be used by the SEC to reinforce its stance towards the GBTC application. So a little bit ironic, because if this was actually the case, should they convert to an ETF, the thought is the discount would appear because the Regulation M status would allow for the fund to create/redeem shares with the current demand of the market, which would effectively eliminate that discount. And the SEC, despite saying they want to protect investors, has not allowed that to happen, but they will allow futures ETFs to launch in which people can effectively infinitely short Bitcoin into the ground, which does actually somewhat remove the whole supply demand value proposition when it comes to Bitcoin. So despite what they say on the surface, it is very obvious that the SEC does not give a crap about retail investors. And we actually talked about some very interesting connections between the SEC, most specifically SEC Chairman Gary Gensler, as well as Sam Bankman-Fried. So if you guys do want to learn more about that, definitely check out our previous videos, as there's a ton to unpack there. But definitely still nice to see that Grayscale is fighting to make this into an ETF despite the SEC trying to put it off constantly. We also know that since the transition to proof of stake, the SEC said that they are not even outruling Ethereum as being a commodity, that even ETH could be deemed a security. And this was very interesting given the fact that in 2018 ETH was given the green light as a commodity. So now their justification is that any crypto that is under proof of stake that allows people to lock up their crypto to generate some sort of passive income based on the blockchain revenue should in fact be deemed a security. You guys know that I could not disagree more, but the matter of fact is the only one that we know is safe at the moment and has been deemed a commodity is Bitcoin. Now, one of the reasons that people would argue ETH is a security is that unlike Bitcoin, there is not an anonymous creator. The Ethereum Foundation is very well known. They do in fact dictate what happens to Ethereum, which we did see pretty much front and center as it did transition from proof of work to proof of stake. This would not be possible without the Ethereum Foundation effectively overseeing the Ethereum network and causing this transition. But since the transition has gone live, I think it has brought a ton more value to ETH holders. And you can see here that in the past 63 days, we have actually burned 5,872 Ethereum. Now, had we remained under proof of work, this would have actually, instead of being a net burn of 5,800, it would have been a net dilution of 755,000 Ethereum. And yeah, this would have been going to miners who would have basically dumped on retail using us as exit liquidity, and that is how it was going before. But now Ethereum no longer has to worry about these miners. ETH does not care because we now are under proof of stake. So I think the transition to the proof of stake was very successful. I think people are sleeping on it at the moment because, I mean, to be blunt, there's just been a lot more going on in the crypto markets that people are not so much concerned about Ethereum's tokenomics. But I think that when the bull run does resume, that ETH is really going to rip faces, and that is why I still think that's why ETH is my top position personally, and second is Bitcoin. And I also think that a lot of people are going to wake up to the fact that despite all the layer 1 competitors, Ethereum has remained on top for a very long time, and I really do think that it will be that way in the future for the next like 5 to 10 years minimum, and that's just my opinion. Now, we can also see here that we do have more and more people actually staking their Ethereum and locking it up. So even if you ignore the fact that 5,800 ETH has been burned in the past 63 days, another 15 million Ethereum is being locked up to validate this network, and you take into account the fact that it has a current supply of 120 mil, and that works out to about 12.5% of the entire float being locked up for staking rewards. And speaking of the staking rewards, we actually saw them escalate very, very quickly here from the mid 3 to 5% range, give or take, all the way to now sitting at 8.5%. And you can see that reflected here on Lido with this 8.5% APR. And a lot of people are wondering why exactly did this happen. So Lido Finance, the largest liquid staking solution for Ethereum, actually did release a proposal and on-chain vote for increasing the APR on the staked Ethereum. And for those of you that want some perspective on just how big Lido is, keep in mind there is about 4.7 million Ethereum staked with Lido, and then factor in here that we have about 15 million ETH staked. That means that Lido has easily over a 30% market share of all staked Ethereum. So when you see something like Lido Finance with pretty much having control of 1/3 of Ethereum staked proposing to increase these rewards, yes, that will have a very big impact on Ethereum itself. I think it is going to cause a lot more people to lock up their Ethereum in the near to midterm future, which once again does fare much better for the long-term price action of ETH, as all of this staked Ethereum is still locked up in the smart contract until the Shanghai upgrade does go live. And there's a whole long explanation here for exactly what happened. It's pretty technical, but long story short, the main reason that this limit was set and now being increased is because the limit was set before the merge and had not accounted for potential execution layer reward spikes, which is effectively the reward spikes that are accrued by the protocol itself. This is not something that Lido could have really foreseen before the proof of stake transition did happen, but now that it has, we are in fact seeing a more substantial Ethereum yield coming out of this blue chip crypto. And if we actually Google the Shanghai upgrade, you guys are going to notice that the Shanghai upgrade is not even expected until like mid 2023, and that means that we're probably not going to see it until like 2024. So I think that fares very well for Ethereum, the fact that we are effectively going to have, give or take, 12.5, I would predict all the way up to 15% of Ethereum just completely removed from the float until we actually do see that unlock happen. But the unlock is definitely something we are keeping an eye on, because some people have had have had their Ethereum locked up since 2020, and at current prices, I don't think people would be too incentivized to sell. But once we do enter the next bull run, and it may seem like it's never going to happen, but yes, it will happen eventually, that's when we probably will see some profit taking, and we will see a lot of this Ethereum that has been locked up come back into the float. So definitely something to sort of keep in mind for the long term, but in the mid to near term, really, this is just more bullish for ETH. And I think that it has definitely contributed to Ethereum being an outperformer. The fact that the tokenomics have improved, that ETH is more scarce, and now people can get additional yield for it. So why would you be selling your Ethereum in a bear market where you can be locking it up and potentially selling it at a later date while earning that passive income, which is always appreciated, especially when the crypto market is this ugly looking. Now we got to get into the centralized exchange news. We got FTX's bankruptcy filing, which is shocking, honestly. And I didn't think anything could shock me when it came to FTX at this point, but this rabbit hole just continues to get deeper. We got Binance being investigated, as well as Crypto.com with some major CRO coin burns. So for starters here, take a look at this. FTX lent Sam Bankman-Fried over $1 billion for personal use. And when I say FTX lent Sam Bankman-Fried $1 billion, we mean $1 billion of their customers' funds. They did also go ahead and lead $543 million to Mr. Singh, another one of the people high up on the board of FTX, as well as $55 million to Ryan Salam. And they actually were a debtor of $2.3 billion and 3 loans by Alameda Research. So FTX used customer funds to buy houses for employees. FTX did not even have a list of all their employees and what they even did. They did not keep any books or records of their digital assets. Alameda Research was exempted from auto liquidation on FTX. So think about it like this. When you guys trade on margin, you obviously are at risk of being liquidated. That is how people get wrecked on margin, okay? Because you trade on margin, and if your crypto drops below a certain price, boom, you get liquidated to ensure that you can pay off the loan. FTX effectively put a cheat code in place here to make sure that Alameda Research would not be auto-liquidated on their positions, and somehow they still lost $10 billion. That is how garbage this quote-unquote venture capital firm was at trading, that they pretty much cheated the rules. They hacked the system to not get liquidated and still lost billions upon billions of dollars. And the unfortunate thing is, it was not even their own money. It was their customers' money. They also built a software to hide the misuse of their customer funds. They had $400 million in unauthorized transfers the day they filed for bankruptcy, billions in investments other than crypto, but there are no books or any records of it. And Sam Bankman-Fried made all business decisions on apps that auto-deleted everything after some time. He encouraged all employees to do the same. So definitely we knew that this was incredibly shady on behalf of FTX. We knew that Sam Bankman-Fried was lying from the beginning when he said that he had no idea that they would implode like this. Clearly what they were doing was very intentional, and I think this just does go to prove it, as we have finally seen the legal documents. So FTX obviously did get exposed when CZ, the Binance CEO, called their bluff and began selling all of their FTT token on the open markets. And as a result of this, they are actually now being investigated under congressional scrutiny, and the reason being obviously is basically regarding their contribution to the collapse of FTX. Now, they say here, basically referring to CZ, that he did play a big role in the sharp decline of the token, and the first step is a bipartisan call for a hearing, and they are certainly going to prioritize this. We do know that they are actually looking to extradite Sam Bankman-Fried back to the US for the FTX hearing as well, and I think it would be very interesting to see both Sam Bankman-Fried and CZ actually in front of Congress. Effectively the number 1 crypto exchange currently, and what was the number 2 crypto exchange. I think that having both of these CEOs up there sort of talking about what happened could really either make or break the crypto community, and this is definitely an ongoing story that I do plan to keep an eye on. Now listen, right off the bat, I have to say that it shouldn't matter what CZ did. The fact that he sold that FTT token should not have caused FTX to go bankrupt if they were actually responsible with their funds. So yes, at the end of the day, this is on Sam Bankman-Fried, but at the same time, we know that CZ pretty much, we don't know, but it's very heavily implied that CZ knew exactly what he was doing when he sold this FTT token, and the main reason being is that he was actually offered to potentially go ahead and sell this FTT back to Alameda Research over the over-the-counter market so that it would not have such a big impact on the public market, and CZ pretty much declined and continued to dump on the public markets, forcing FTX into this liquidity crunch. I mean, once again, a very, very smart business move. And again, Sam Bankman-Fried's fault that he even allowed the company to be in this spot in the first place. So I don't think that CZ could really get in any trouble for this because it was not really his doing. It was more so him seeing an opportunity and taking it. And at the end of the day, I do think the responsibility should fall on Sam Bankman-Fried. But I think it would be very interesting to hear what Binance does have to say about this. And additionally, Binance is dealing with their own actual set of problems as well, as we do see the economics professor Nouriel Roubini say that Binance is a walking time bomb. Binance is banned in the UK, is under investigation by the US Justice Department for $8 billion in money laundering. He should be kicked out of this country, talking about the UAE. He says here that taking your crypto out of Binance for now seems like the safe play. There is no question that they kicked the second biggest financial donor to the Democratic Party off a cliff. It is a given that they most likely will retaliate in a big way. Now, this is why we always talk about Binance's strategy when compared to Crypto.com's strategy. And the reason being is that while Binance and FTX have been in the middle of this whole debacle, Crypto.com has kept their heads down. They have continued to work, and they're doing things the proper way, in my opinion, with this regulatory approval. You can see here that throughout this bear market, they've gotten approval in Paris, in Singapore, Italy, Cyprus, Greece, Australia, Cayman Islands, Ontario. Like, the list just goes on. South Korea, Dubai. I mean, they're really just going the proper way of regulation and compliance, and I think that is going to pay off in the long run. We know that CZ did also try to create a bank run on Crypto.com by pretty much blowing up that story about the Ethereum transfer to Gate.io to the tune of about 400 million, which at the end of the day did turn out to just be a Crypto.com whitelisted address. So Crypto.com keeping their head down, continuing to work on really building up their platform, and I do think that this is a strategy that will benefit them in the bull run. Now, while Binance is in fact being investigated, they are also relaunching the bid for bankrupt crypto lender Voyager. So we know that previously FTX and Binance were bidding for Voyager's assets, in which FTX did win at the time. But following FTX's announcement last week to file for bankruptcy, Voyager said it had reopened the bidding process for the company. Now, given the fact that Voyager is reopening the bankruptcy bidding process, and we know that CZ did in fact bid for them the first time, why would he not do it again a second time? I think it is more than likely that he is in fact going to go ahead and buy Voyager's assets. And if he does manage to acquire Voyager and pay back customers, then some of the people who are, kind of throwing shade his way for the whole FTX scenario will probably forget about that real quick. So once again, CZ, I mean, despite what any of you want to say about the guy, he is out here playing 5D chess. Other people are playing checkers. Definitely a very smart business move, but it does also look like regulators are finally starting to close in on a Binance as a platform, and we're gonna have to see how this does unfold, because don't get me wrong, if Binance did get into some serious legal trouble here, that would once again be a massive setback to the crypto industry as a whole. Now, additionally, Binance did suspend deposits of USDC and USDT on Solana until further notice, and we know that when Crypto.com did this last week for the USDC on the Solana blockchain, that people were out here fighting Crypto.com, saying they had halted withdrawals, when really it was a Solana specific issue, because Solana is very closely tied to FTX and Alameda Research. And if you guys have been with the channel for a while, you know that we were already very bearish on Solana for months, especially with all of the network outages this year, given the fact that they clearly prioritize flashy transaction fees and transactions per second over security, which is a no-go for institutions that are looking to lock up potentially millions of dollars on a blockchain. Do you think they give a crap if their transaction sends in 1 second or 10 seconds or even 10 minutes if they do not feel secure with their money on a blockchain that consistently crashes? Now, what has happened with FTX and Alameda Research has really accelerated the downfall of Solana, in my opinion. And honestly, guys, I mean, I know there are a lot of Solana bulls out there, and I'm not the person to go out there and bash other crypto projects. I want all of these projects to succeed, all of the good projects to succeed, because we need that for the crypto industry to move forward as a whole. But projects like this that are clearly not secure and that really for the most part have just been used by VCs to dump on retail, these are not projects that I personally support, and that is something that I stand by. So that is all of the Binance and FTX news, and now we're going to wrap this up talking about crypto.com. You might have noticed a couple of days ago that I did tweet. They actually burned here another 200 million CRO coin. You can see 4 days and 9 hours ago, crypto.com sent another 200 mil to the dead wallet address. And that now brings the balance up here to 77.887 billion CRO. So take a look at this. In the past 30 days alone, we have gone up from 77.4 bill to 77.8 billion. So another 400 mil having gone into this dead wallet address in the past 30 days alone. And to actually give this greater perspective, you guys got to see what this looks like on a 1-year chart, because this is when things get a little bit nutty in my opinion. So let's just go ahead and wait for this chart to load whenever it wants to do that. Yeah, as you can see here, we actually came into last year with 76.6 billion CRO in the wallet. That is now up to 77.8 billion. So some very quick math here. If we actually go ahead and do 100 billion, which was the initial flow, minus that 77.8, we are now down to 22.2 billion CRO left. And this is important because keep in mind that crypto.com is on the path to actually having 100 million users by, let's say, like mid 2023, early 2024 at the latest, in my opinion. And assuming that every one of their customers and users does want to have some CRO in their wallet, that is only enough for everybody to have 222 CRO per wallet. This does not include the whales that hold millions of CRO, the people holding thousands or hundreds of thousands of CRO. And that is why I think that even with a supply of 22.2 billion, that CRO will still become very scarce in the future, and that a supply shock is incoming. So on that note, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Friday, and I hope to catch you in the next one. Peace out for now.